Since there hasn't been too much action given the economic downturn in the last year or so, how has Blackstone India been passing its time?
Oh, you're not passing the time is a wrong expression. I think we've been extremely busy. We've been fortunate. We have 8 portfolio companies, by the way.
Right.
So we have engaged much more deeply, and to some extent this came as a good respite for us because as we're building our team, and we had done deal at a very fast pace compared to most of our competitors, that it was a good breather for us that we were able to engage very, very significantly with our portfolio companies. And now, that we have had 6 months of very deep engagement with our portfolio companies, we obviously become smarter and more efficient in terms of how to help them. So that gives us now time to focus, sort of divide our time between investing and portfolio company management.
When we say PE activity here, however, picking up and once again reaching those peak levels that we saw earlier.
We may never reach that peak levels, and the reason is that kind of excess liquidity that we saw in the market will never come. And I'll give you an example. When we came and announced $1 billion, it was a big number, right? If you believe in last 2-3 years activity, $1 billion may not sound much to you, but I think my view is $1 billion again a big number in the future because that excess liquidity will go away. So India will have to work harder to attract PE capital. So I don't see as an industry, we might do as well as in the past, but just because we just build up expertise, experience, network, our name is there, brand is there. But overall from the industry, I don't think you'll reach peak levels in the next couple of years.
Okay. How difficult is it today to face an investment committee in Blackstone?
It's actually never been difficult. In fact, one of the strengths of Blackstone is our investment process. And for that matter, I would say the differentiation for any investment firm is its investment process. We have an extremely robust investment process. We have an investment committee which consists of very knowledgeable people, as I mentioned. They have been there. They have seen companies in different phases. And there's never been a deal that I have taken to investment committee. There was not at least one partner. Usually there are more than one partner that hasn't seen deals or done deals in similar sectors. So we get a huge amount of benefits in terms of saying, okay, look at this issue, look at this analytical framework. This is what you should look at. And usually one of the partners works very closely with us before we even take the deal to the investment committee. So I find they're extremely supportive of India, and there's a lot of institutional learning about India. That was one of the main objectives. In fact, most of them are the enthusiasm that got generated. I had 4 partners. They came and spent 4 days with our portfolio companies, and that's a sign of how important they think India is. I mean, for my partners to take 4 days, which means plus 2 days of travel, it's almost a week gone. It's a major commitment of their time, and they went back very pleased with the fact that it's amazing that 8 companies we invested, we've not been wrong on investment thesis, and the biggest surprise to them was the quality of the management team, and that's what I think is going to sort of help us even further, because unlike in the US or in Europe, where even if the management teams are not good, we'll invest because you can hire and fire the management teams. But in India, most of our investments are with entrepreneurs. You can't hire them, you can't fire them, right? So you have to work with them. So that's why sometimes when you find the company is very good, right, and the economics are very good, but if you're not comfortable either the competence or the integrity of the promoter, we just don't invest. So I think that's been a great surprise to them, and they're becoming more supportive of India now.
Okay. You spoke a lot about oil cargo. Are you looking at perhaps investing further in that company?
We are actually evaluating right now, as we speak.
And on the other front, any exit plans? Or
it's too early for us to think of exits. Okay. If you look at our average holding period in the US is 5.5 years. I would venture to guess that it should be higher in India because of the growth story. I see a secular growth story lasting for 7 to 10 years. So the only reason for us to get out is if we feel that the value addition that we can bring to the company is kind of reached a maturity stage, and the cost of holding is more than the company can.
With some of them, like with Nagarjuna, for example, you have had some problems when it comes to regulatory issues. Do you think perhaps sometimes our policies and so forth are anti-investment?
No, I would say, and it's a question of looking at glass half full or half empty. Clearly, if I was the finance minister or I was the SEBI chief, I think I look at all the regulations from a cost benefits perspective. I look at it completely from zero-based basis. Like if today I want to promote FDI, which I think is a very high priority, like our Honorable Prime Minister said, that the difference between 7% growth and 9% growth is how much capital that we can generate and attract into India. So it's a very high priority for us because we know the kind of problems we have to solve in this country. Growth is the only way out. We have to grow, so we have to get capital. So I would say we have to do a hell of a lot of work to make us friendly towards FDIs. In fact, I find it very surprising that we encourage FIIs more than FDIs. Long-term capital, patient capital like us is not encouraged as much. If you look at last downturn when a lot of money flew away from India, most of the long-term capital stayed here. It's the short-term capital that went away, and it's very bad for our stock markets, bad for our investors. That you go to very high because a lot of hot money comes in, and then the market tanks, and investors lose money, and they never come back to the market for years and years and years. So I think if I had to say that yes, there's a lot of work needs to be done. I think we really need to do a bold sort of a reframing of our policies. But we have not faced any regulatory issues specific to Blackstone. In fact, when we had an issue with one of our investing companies and I made visits to Delhi, met ministers and secretaries, I was quite surprised how much they knew about Blackstone. And I used to take a deck to present them to say about Blackstone, don't tell us about Blackstone, we know everything about Blackstone. And how warm they were and how helpful they were at every level, including at the Prime Minister level, extremely helpful to encourage us but then the rules are rules. And if you look at Nagarjuna, we're caught in that operating holding company controversy, and $50 million we could not invest because of that.
The new government's also very bullish on infrastructure spending. So any plans in that space?
Very much so. I think, as you know, that Nagarjuna Construction is an investment in the infrastructure space. In fact, if I have to pinpoint two major themes for our investing, one is infrastructure clearly, and the second being personal consumption. Because if you have a per capita growth of 4 to 5%, then clearly there will be a lot of sectors which relates to personal consumption that will grow much faster, and that's where we want to invest.
You said, in terms of PE activity, markets may not reach the kind of levels we've seen earlier, but in terms of the capital markets, when do you see them sort of picking up? We've already been seeing somewhat of a rally. Is that sustainable?
I think long term you see much higher levels, and I do not rule out that we could cross the previous reach level. I cannot when. And the reason is that I think we are on a long-term growth path, clearly. And you'll find sometimes the fundamentals, there's a dance that goes on between valuation and fundamentals. Sometimes the fundamentals are behind and the stock market is ahead. Like before the elections, the stock market was much more behind the fundamentals. There was no doom and gloom which was implicit in our valuations. But clearly after the elections, we have this euphoria. So the valuations have gone far ahead of the fundamentals now. So I think some correction we have seen. So it's difficult to predict the market in a short term, but I would venture to say long term we're clearly on an uptick, and because the fundamentals are in track. And ultimately markets overshoot and undershoot, but if you take a long term view, markets are really driven by fundamentals.
Thank you so much.
Thank you.